I'm Bruce Lane from GTI Resources, ASX listed code GTR. I'm the Executive Director. We've got exploration projects for uranium, in-situ recovery uranium in Wyoming, in amongst the neighbours of Energy, UEC, Cameco, Energy Fuels, and we're actively exploring to expand our existing resources.
Good to see, Bruce, and thanks for coming back on. Wyoming, kind of busy at the moment, certainly on everyone's lips, but we'll come back to that. You did some drilling, put an announcement out in December, confirmatory drilling. I mean, what did you find out?
Yeah, look, Matt, we were aiming to validate and verify our historical database. So we acquired a database back at the start of last year, had 1,700 drill holes in it, 880 of which pertain to the property that we then staked. So we were able to define a JORC resource, inferred resource of 5.7 million pounds off the back of that, with a significant exploration target on top of that. And what we wanted to do is go in and check that those paper drill logs from the 1970s actually were telling as close as possible to the truth. And so we went in to twin a number of holes there, and the good news is that we were able to verify those holes and got the results we expected. So that was a big tick. And then the second part of that program was to just test some of our hypotheses about the exploration potential. And there were two vectors we were really looking at. One was a long trend in the Wasatch Formation, which is the shallower part of the deposit down to about 400 or 500 feet. And then below that, there's the Fort Union Formation, and that's the formation that Cameco produces out of at Smith Highland Ranch, which is about 10 miles to our east. So what we discovered was, yes, the potential existed along trend. We also found that there's a deeper part of that Wasatch Formation that we didn't realise was mineralised in some sections that we drilled. And we also got mineralisation in the deeper Fort Union. So look, not every drill hole hits mineralization, but what we are looking for are oxidation and reduction boundaries on the roll front. And so what that tells us is what the margins are of where the mineralization, is occurring, and it helps us to guide our planning for the next phase of exploration. So it was very successful on all those measures.
Okay, so you spent a bit of money there, presumably doing this confirmatory drilling, and it just tells you what people had told you had. But yeah, I get, given that it's from the 1970s, I guess you needed to be damn sure that what was on paper was actually under the ground as well. But how do you move this thing forward in terms of advancing it? Okay, you now know what you thought is there. What do you do in terms of scaling to making it a sort of interesting story for the market, for acquisitors, for funders? I mean, how does this thing grow?
Yeah, it's kind of the $64,000 question, I suppose. Look, the background is we've also done some geophysics on the property. So we've done this confirmatory drilling, and we've done some testing of the hypotheses around the exploration potential. In addition, we've added a bit of ground, and there was some drill holes in that bit of ground in the deeper part of in the Fort Union. So what we're trying to do is build a concept of the potential scale of the mineralization. So, 5.7 million pounds is good start. We probably want to be closer to 10 to be able to build a central processing plant. The capex for that we think would be in the region of around maybe 75 million US, including some of the bore field costs. And if there's a 10 million pound deposit at 75, 80, maybe it's $100 a pound uranium, that's a $1 billion in-ground value. So if we think we can put a plant up, say it's $75 to $100 million, then the economics of these things look really, really attractive. And that's why there's 6 or 7 of them in the neighborhood. So what we're trying to do is paint a picture of the scale and then design an exploration program that's, able to deliver that sort of more to the 10 million pounds plus mark. And the top end of our exploration target is well north of 10 million pounds. But, our realistic expectation is to be able to deliver that as a starting point. We've got other projects in our portfolio and we can build out the resource numbers, But this is the juicy spot for us, the jewel on the crown, and it's the next logical step, being 10 miles away from Cameco, to actually prove that asset and then move it towards a PEA.
Okay, and let's talk about Cameco. So they have a lot of property in Wyoming, which is, they're not doing anything with at the moment. But I guess at these prices, they may be reconsidering that. But there's also a bit of negative news in Wyoming. Peninsula has struggled for the past couple of years to kind of say to the market, we are in control of our own destiny here. And I think that's going to rub off on a lot of the Wyoming players. So have you got one eye to growth, but maybe one eye to demonstrating some of the economics that I know it's a theory thing, you haven't got the studies, but if there's $1 billion in ground, like how much is recoverable? What do the economics look like for this kind of low grade type project? Why is there kind of cause for positivity around these stories?
Yeah, look, low grade, it's not low grade compared to, a Namibian open cut. We're probably, 600-700 ppm, and UR Energy, is producing in that sort of range, 400 to 1,000 ppm. Or I think the Shirley Basin's 1,000. So, look, the economics, are very positive in these projects because the exploration costs are modest and the risk is low around exploration. We know the CapEx because we've got two things to look at. One is Peninsula's recent announcement around the development of the back end of their plant at Lance, their elution precip drying circuit. I think they published a number around $20 million for the capital component. And then we've got UR Energy, who've just moved on Shirley Basin, and they've got $33 million around the development of the bore field and the ion exchange tower. So that's pretty helpful. Doesn't tell you exactly what the bore field development cost is and whether you capitalise that or expense over the life of the project, but that's where we get a number from. So we got a pretty solid number. Shirley Basin's 8.8 million pounds, 6.4 million pounds recoverable. So we know that the scale of these things is similar. So we've got some really good analogous properties around us. And so our numbers are not, obviously these are not JORC compliant numbers. I can't provide investment advice and all these things, but you can look at these at our neighbours and see some reality there. It's not just, kind of made up on the back of a fag packet. So, we think at, I think UR Energy are talking about $30 to $35 all-in sustaining cost, and I think Peninsula are talking about closer to $45. Now, clearly, Peninsula is an acid project because it's in the Cretaceous formation. It's a different geology. It's an older geology, whereas our deposit is the same as our deposits are the same as everyone else in the basin. They are in the younger formation, and they're all going to be an alkaline leach, so the costs are lower. But we may not get as high recoveries, but our costs are lower. But either way, if we said 35 to 40, or you said 45 to 50 even, you're still looking at $30, maybe $40 of free cash a pound. And if you can do £1 million a year, or even £500,000 a year, the economics are very, very attractive. So that's why there's all these plants here in Wyoming. There's 7 permitted, and we've got UR Energy in production, UEC talking about getting back to production this year, Energy Fuels with Nichols Ranch quite possibly back in production this year, although they're not being, overly kind of concise about when it is that they're going to get back into production. And we're pretty sure that Cameco's at least having a good look at what they're doing in Wyoming. The Smith Ranch Highland is a £5.5 million per annum licensed ISR facility with a bore field development around it. So, it's not inconceivable that they might want to start turning that on soon. Okay, so those are some good comps that I'd like to say people can go and have a look at that and get a sense of what the kind of average may be. I say acid, alkaline, etc. Let's look at the front end of that, which is the exploration, which is where you're at. You've done the confirmatory drilling. You're going to need to do more drilling. Can you just, again, for people who perhaps new to this, the type of drilling that you're going to be doing is going to be different from conventional hard rock drilling. So can you give us a sort of sense of that and why that perhaps doesn't cost as much as conventional drilling? We're not looking for the glory hole, so to speak. we're drilling down to, yeah, sorry, trivial analogy. We're drilling down to, the historical drilling was around 300 or 400 feet. And the Wasatch Formation that we're drilling into sort of extends down, 5, maybe 600 feet. So, 100 meters, 120 meters, that sort of thing. Now, we're using mud rotary drilling. It's just like drilling a water hole. So it's probably some of the cheapest drilling that you can do on the planet. You can stand next to the rig and have a conversation in a normal voice. So it's very low impact, low cost drilling compared to, say, an RC or diamond drilling rig. The costs are very modest. So what we do have to do, though, is put in quite a number of holes. So if you look at the number of holes in the historical resource, our historical resource has got, say, 800 odd holes. So the risk around exploration is low. We can follow the oxidization and reduction boundaries, and it's visible, and then we can get our results, obviously, with a gamma probe straight away as soon as we've drilled a hole. So we know whether we're in the juice or not, and we can tell visually whether or not we're close. So the exploration part of it is quite different. We don't have to wait for weeks for lab results, although everybody can use a gamma probe, but in our case, we've got, good visual cues. So, the exploration is low risk and it's of modest cost.
Right, okay. So I'm wondering how a company like yours would use, so $20 million, right? There's a lot of them, and there's a bunch of stuff being dusted off and being presented again as if they were brand new shiny objects. There's a lot of competition. So positive uranium environment, because spot price has been kind of moving through the phases. Now $3, I think, yesterday. You're in a good environment. People are looking in. The narrative is positive, and more people understand it. So how do you make yourself more attractive? How do you help people understand that you guys, with your track record, are here to do serious work and not just come along for the ride?
Yeah, look, I think if you look back, we've been actively exploring in Wyoming and prior to that in Utah for the last 4 seasons. So, we get out and we drill holes, and we're trying to add value to those assets. We're not sitting on things. And we've had to do a lot of work with the historical database that we've got to get to the point where we're able to not just declare a JORC resource, but also get on the ground, do drilling. We're able to do that in a period of around a year, which, if you look at where we ended up at the end of December. So it's really important to be able to show that you can actually execute on ground, we believe, to demonstrate not just to investors, but, to ourselves and all of our neighbours that we're a serious player and that we're here to do good work. We're not just using the pen to try and create value off the back of a trend. So we very strongly believe that the uranium production sector in the US is coming back for the long term. We believe there's a level of commitment and understanding that wasn't there, 10 years ago. And so the long-term prognosis to move US uranium production back from zero, basically back towards 40 million pounds a year, is underway. And so we believe that these deposits in Wyoming are a significant part of the future. Now, whether or not, they all get developed individually or somebody comes in and consolidates them, we obviously can't control any of that. All we can do is add value to what's in the ground and be intelligent about how we invest shareholder funds to deliver that value and hopefully deliver an improvement in the share price. The market seems to be appreciating uranium stocks today a little more than it was back in November. And so that's encouraging, but it doesn't in of itself change what we're doing, and so what we'll see over the next, 2, 3, 4 months is our plan for our activity is getting firmed up, and we've got more drilling programs planned. We'd like to be, drilling not only on our Low Herma project to increase the size and the confidence of the resource. We'd also like to drill on our Green Mountain project. Whether we get to do all that, we're not sure, but those are the things we'd like to do.
Okay, and if I look at the sector at the moment, you've seen a lot of consolidation up in the Athabasca basin, and people at UC, Denison, Atha more recently, doing these roll-ups of what they believe to be good solid projects. it's inevitable that Wyoming is going to come under the scrutiny of some of those groups I mentioned, some new groups coming up because the finance guys think there's some money to be made here. How do you make yourself, you've got to do two things here as a smaller company. You've got to make yourself defensible to be able to kind of get to the point where you feel that you kind of create enough value and therefore enough return for shareholders. And at the same time, you've got to fund that, right? So without being dilutory. So how do you do that? Well, what are the options on the table for a player like you?
Yeah, look, the obvious option is to raise further equity funds, but obviously, we don't want to do that in a way that's excessively dilutive to our shareholders. And we've got a group of loyal supporters, and we want to do the right thing by them. So some of that's about timing things and about making sure that we spend the money, as close as we can to the right time. Look, there are other options that we're exploring. I mean, there is interest from various parties in these assets, and it's not necessarily only equity capital raising that's the answer to how we fund the company. There are other possibilities. Now, we don't obviously have anything at the moment that's, would require announcement or that I can talk about, but suffice to say, we aren't just tunnel vision, focused on selling more shares. However, that's likely that, raising equity capital at some stage is going to be part of the mix.
Yeah, okay. And I appreciate if it was something you needed to announce, you'd announce it. But at the same time, it's that delicate dance that you guys have to do to kind of keep your options on the table. But it's clear that Uranium Sector is moving. It's doing the heavy lifting for a lot of companies. But your job is to say, well, here's how we play in that arena. Here's how we move forward. And that's got to be, I guess, going forward for you, more about this kind of growth component. Can you find more of it? 5 point something is a good start, as you said, but you're going to need to kind of show that scale into a US market, which is finally kind of woken up to uranium and nuclear. So are you getting, are any of those options funds from IRA or any other kind of government departments? I mean, how active are they? Is it all just chat and it's all kind of like downstream stuff, or do you miners actually get a hand from the US government anytime soon?
Look, at this stage, if you don't have pounds to sell into the strategic reserve or to deliver into a HALEU enrichment program, and you're not part of the nuclear power sector in terms of being a utility, or perhaps it's someone who owns an enrichment facility or has a centrifuge. If you're outside of that at the moment, there isn't anything directly available to the explorers. Now, that wasn't the case back in the past. In the 1970s, there was a lot of money and support that went from the government to finding uranium. And, you had a lot of other players back then. You had the utilities playing, and if you look at what's happened in lithium with the battery makers and the car suppliers or the car manufacturers, they're vertically integrated back into lithium because they've understood, as Toyota said, well, they can't build that many lithium battery-driven cars because they just can't get a hold of the lithium, and they don't think that's the right thing to do. So the utilities, if the crunch that we're reading about and hearing about is really that real, then the utilities will start to look beyond the current deposits and look at exploration and development properties and look at, whether or not they can actually get a strategic position in those to get offtake, much the way the Chinese government does. And maybe the oil companies will come back into the sector because the oil companies were a huge player back in the 70s and 80s. A lot of the historical exploration work that we've been taking advantage of, came from the likes of, Exxon or Pioneer or, Union Carbide was a big player in this area. So the oil and gas business is very, very strong in Wyoming. They understand the property side of it. They understand the exploration side of it is very synergistic for them if they're interested in that part of the energy sector. And some of them have been playing in lithium, so why wouldn't they go back and play in uranium? So we could see some moves in that direction from more strategic players who really want to get more involved in securing supply for the future. Hasn't happened yet, but it wouldn't surprise me if some of that does start to occur.
Now, the Aussie market, pretty strong at the moment. I mean, I think the Canadians are looking on enviously at what the Aussie investors are doing and how that's benefiting Aussie companies. And it's a positive uranium environment for sure. Again, I just going back to this thing about how you play that, how you take advantage of that. You don't have a OTC listing, do you?
Yeah, we do. We have an OTC listing.
Wait, which one?
Yeah, OTC. Well, it's just OTC Pink at the moment, but we were
Pink.
OTC,
Okay, fine.
we were OTC QB, so we're fully compliant to be QB listed.
Right. Okay. So clearly, you're in the. I mean, Peninsula's been through the same thing in the sense that they're a Aussie company in the US, which is a very positive environment. Do you intend to do any more marketing in the US?
Yeah, look, we did invest quite a bit of time and effort in marketing in the US. Probably more 18 months ago. We spent a solid year burning shoe leather and a few air miles. And look, there's a strong interest. There was a strong interest, but at that stage, I would say it was a little nascent. And I think, the company was probably a little early for the investor group. I mean, if people are investing through their 401ks and the IRAs, there are some restrictions, and in California there's blue sky rules, so it's not a straight line to finding investors. And from a cost and time point of view, it's not the easiest thing from Australia, and that's just a fact. So, but we're doing some things through the course of the next month or two to help bolster our position in the US on the ground, and you can't get ahead of yourself. Like you can't spend it all today in the absolute belief that you're going to get there tomorrow. It's sort of, it is a bit of a game of inches. So we're now at the point where we can confidently start to put some more feet on the ground in the US and be more active in the community. And it's not just the investment community; it's our peers, it's our neighbours, it's the industry more broadly. And so that's very much a part of our current thinking and our current planning. So there's a limit to what we can do, but, for sure. I mean, it's a US-centric story. They're very literate with uranium in the US, compared to, say, Southeast Asia. And so it makes perfect sense to be investing some time and effort in getting out and talking to people. And we certainly will be doing that for sure.
Okay, Bruce. Well, I appreciate you coming in, give us the update, and, glad the kind of drilling went the way that you hoped it would. We look forward to hearing more about how you tackle 2024. So stay in touch, okay?
Yeah, great. Thanks for the chat, Matt.